$0.7 billion in assets under management. And I feel so special. Jim, welcome. Good to see you.
Always good to be here.
I got like 10 emails from you about things you want to talk about over the last couple of days. A lot of it has to do with China, but also you got your tentacles are everywhere. Online betting stuff, healthcare. You've got ideas about that. What do you want to start with?
Probably Mark Faber's tour through Bangkok, which I've done with him. And
that's why I meant to. I love that man. I do, because he's, you ask him about it and you expect him to say, there's not much going on over here. And he doesn't. He's like, I can't say I don't know the story. I don't live vicariously through him, but I mean, there's a reason he lives in Bangkok.
I'm sure he was a technical consultant for the movie.
Yeah, for Hangover 2. Do we have to wait for the cameras to go off for you to recount some of your...
Yeah, I think that's probably...
Really?
Good.
It is? Okay. Yeah. All right. Anyway, what about China at this point? Let's start with that.
The cracks are spreading on the facade.
Really?
Not to mix a metaphor, but our team was just over there, just got back. And in terms of
you didn't go?
No.
And you haven't been?
I've not been.
But you don't need to be. You've been to Hong Kong.
Yeah.
Okay, that's close enough. I think. Yeah. No, I do. But okay, so continue. The cracks are starting. Your team was over there.
Our team was over there, and again, they're looking like for like, looking at developments that they looked at a while ago. Are there more buildings up? Are they empty? Are they occupied? But on top of that, we're seeing a slowdown in residential sales, with arguably declining prices depending on who price series you're looking at. And you're seeing real estate firms shutter, so sales offices be closed down. So some of the engine behind the boom is at the very least beginning to sputter. And now there's a lot of observers who believe there's only two speeds in China. That, you hit the brakes or you hit the accelerator, and that they're going to hit the accelerator at some point because hitting the brakes is going to cause too much of a slowdown. I'm just not so sure that in light of what we've seen with the power outages, when there's no price mechanism to reflect real supply and demand, and you put in price controls and various different things, you're going to end up with things like shortages. Right. And I think we're beginning to see some of the evidence of that.
Jim, can you play this out for us? I mean, I hope your investment in Chinese real estate does well or whatever, I don't really care. But what I am interested in is this a systemic risk play that you're playing? That what happens in Chinese real estate becomes something that either brings down a broader section of China, say Chinese equities, or becomes an issue for the globe?
Well, I mean, keep in mind that right now we're still seeing something unprecedented. We're seeing a $5 trillion U.S. economy invest basically $3 trillion a year. So this is something, I mean, just truly unprecedented in terms of the amount of investment spending they're doing to keep the economy going. And I think that it certainly is going to have knock-on effects, as we've talked about in the resource-producing countries, if demand slows there. I mean, by all accounts, China is importing 50 to 80% of a variety of different hard commodities. On the margin, they're the driver. So that will have an impact. But will it be systemic to the extent that the real estate slowdown in the West was? I'm not so sure.
My favorite thing that you sent me was, who was the official that said, you've got it wrong, because we over here have done a lot of planning for how we're going to run our economy, right. And we've thought really long about this, and we put a lot of thought into this. And just hearing that, if you believe in the invisible hand, if you believe that the 100 smartest people can't run a country as well as millions of people acting in their own self-interest. I mean, that's staggering that someone would still say that. He said, we've thought about this, and it's not going to happen. We're not going to let that happen.
It is interesting to me that remember,
who was that?
The real estate, I forget the speaker, but the real estate economy is only 12 years old in China. I mean, private property in terms of owning property is only 12 years old. So they've only seen an up market, number one. So there's the arrogance of, the first-time bull. But more importantly, there is just such an overriding view that the state will not let anything bad happen to me by me speculating. And history treats that statement very, very badly, I think, in terms of people have felt that the government will not let anything go wrong. Particularly when there are so few free market signals as there are in China.
Jim, what I found very interesting is that when you talk to people on the ground in China, and a dear friend of mine, Peter Baum, runs a big import-export business. He knew I was going to be on with you today. He wanted me to ask you, why is it that the smart money in China actually is taking all their money out of China? And how does the the bullish analysts on China growth rectify the fact that smart money in China is taking their money outside. They're buying hard assets in London, in Hong Kong, in New York. Why aren't they reinvesting in their own real estate if they believe their own story?
Well, one argument would be that they're insuring themselves against the tail risk of an income inequality, upheaval, or that they're, look, China, even through the communist reign, has a history of backlash every once in a while. And so having assets or part of your family outside the country might not be, such a dumb thing. It is interesting, Gary, that as the party elites and others are trying to get their money out via circumventing the banking regs or through Macau or whatever, that the American public is being asked to buy right in through the IPO market.
We saw this, by the way, Gary, in Russia towards the end of that run there, and just before the blow up. And one of the lessons is that one of the times to run for the hills is when the locals are selling risk and the foreigners are buying it.
Yep.
The people in the country are selling their very risk. Like, here, buy this area here, which we know is about to be flooded by, they're going to open the floodgates in Mississippi or something like that.
It's even worse than that because, in terms of the real estate developers that we track, what you're seeing is now a cutback on bank lending to these Chinese real estate. So they're now increasingly raising capital in Hong Kong, in the Hong Kong dollar market through junk bonds. And, in addition, Western investors being asked to come in and buy more shares of Chinese banks, again, is not inconsistent with this same.
See, my own short selling background, going back 20 years, when you see these guys come on, they do the IPO, they say we're doing it for diversification purposes, we're trying to access capital here in the United States.
Nobody's giving you a deal ever.
And the fact is, yes, we want to relocate those assets after we monetize to the United States.
Right.
Jim knows that is a good way. That's propaganda. That's propaganda for trying to move your own money outside.
But what Jim just said is interesting, Jim. What you're suggesting is that the Chinese central bank cannot control money creation in China, that they have clamped down on some of the real estate lending, and you're saying they're going outside the country, both to the United States investors and into the Hong Kong junk bond market, and raising capital that way, which is to say that the authorities there are incapable of shutting down the real estate machine?
I think that they don't want to extend any more state credit because, as we know, in China, private credit is state credit. And that's one of the things that we have to be careful when we look at credit numbers in China, because at the end of the day, we've already recapitalized the Chinese banking system twice in the last 15 years. My guess is it's going to have to be recapitalized again after this latest spate of lending. And Western investors historically don't do well in those recaps. So I think that you buy these securities via Hong Kong at your own risk.
But let's be clear, Jim, because your bets have not paid off so far.
Yeah, of course they have.
They have. You've been making money on this short, even though you haven't had the big collapse.
The Chinese market is down, and the property sector is down even more over the past year and a half. So it's actually been a very good place to be in a world where equity prices have gone up.
Yeah, these things. What's the old saying that you can, a trend can go on for longer than you can stay liquid, but you're seeing cracks already.
Yeah, this is a sector now that's underperformed the world equity markets and a country that's underperformed now for the last 18 months.
Just wondering, when you got 2 billion people and you got all our treasury bonds, I wonder how long you can orchestrate what looks to be a positive story before, because sooner or later, I'm so with you on that you can't have like bureaucrats deciding how to manage an economy. It just isn't going to work.
It can go on for a long time. We've seen that in the Eastern Bloc, but the amount of mismanagement of resources here is stunning. And as I say, the markets seem to already be sniffing this out in terms of the underperformance of this sector. So I think that people are beginning, whereas the argument was a year and a half ago with us was, well, he's crazy, he's never been there, there's no bubble. And I think we've moved beyond that. And the argument now is, well, what do we do about it?
Well, Joe, I worry about what Jim's saying because,
I know.
Well, first of all, a lot of people say that when we talk about what happened with the whole financial crisis in the U.S., well, one of the reasons for the imbalance in the world was China's currency policy, which, if I'm playing this through right, China would double down in a crunch on its export economy, which would mean it would continue to buy. It wouldn't be selling off U.S. bonds in the event of a crisis in China. You would think that what they would do was continue, even weaken the yuan in this situation.
Yeah, I'm not a big yuan bull. The whole world seems to think that revaluation is the only way in this currency. And if I'm right about the credit creation and the real estate bubble, you may very well see them reverse policy on that. And the yuan, in fact, a lot of the hot money coming into the country is based on the double-barrel bet that property prices only go up and I get a free call on the currency.
And that becomes bullish for U.S. bonds at the end of the day, because if China ends up weakening, they end up doubling down on the export economy. They have to buy more bonds to continue to finance their trade imbalance with the United States.
But on the margin, I mean, they've been a seller of U.S. Treasuries according to the last handful of months' data. I mean, I think you got to look to Washington and Mr. Bernanke to worry about that more than you have to look at the People's Bank of China.
Well, it's just, I don't know. There's a lot of smart people still, Stephen Roach, or that we have in here, Jim Rickard, that just don't buy into it. They buy into the whole story.
Unending growth. You know, there's a bit of a tautology because a lot of the observers will say, well, growth will bail them out. But in fact, the construction bubble is the growth. And that's the problem I have with that argument. And, you know, a lot of people are willing to say, well, China will slow down. The really scary thing is if you do the numbers and they cut back on the construction, there's not a slowdown. It goes negative really fast. Now, again, we can debate China's numbers and the way they present them. But the fact of the matter is if they hit the brakes really hard, the economy goes into reverse. It doesn't slow down. Okay. And nobody will say that publicly because it's almost unbelievable, but it happens to be the way the numbers work.
Okay, great. All right.